Welcome to Wealth Preservation Solutions. I'm Elizabeth DeLeo, Director of Family Offices. Our CEO, Kevin Ellman, CFP, is joining me today, and we have the absolute pleasure of being joined by Kara Murphy, who is the Chief Investment Officer of Kestra Investment Management. Welcome, Kara.
Hi, thanks for having me.
Oh, absolutely. It's great to have you. You are officially our first guest.
Yay! I'm so excited.
It's hard to believe. Kevin and I have been at this for a year and a half now, and I guess we just said, all right, well, we should probably have someone come in here. We're sick of talking to just each other, right?
We're going to send you a special medal in commemoration of the
Thank
event.
you.
And good morning, Kevin. I certainly don't want to discount you being here.
Well, thank you.
It's always a pleasure. So today we are talking about the hot topic of cryptocurrency. And it's something that many of us think about, hear about, talk about. And Kara's here to weigh in. And first, what I'd like to do is position a question to Kevin, because this is something that does come up often during our reviews. And so, Kevin, what's the number one thing that people ask you? What do you think?
Well, yeah, I wouldn't say this is the number one. They would say, what do you think is going to happen to the stock market tomorrow?
Right.
That's the number one thing. Followed by, what about next week?
Right.
But more and more people are asking about crypto and should they invest and should it be part of their portfolio? And as a matter of fact, we have an appointment later today with a family that I know for sure is going to mention it. So it's coming up more and more often, and we need to have a response. Mm-hmm. And I think up until recently, it's been almost impossible for us through our broker-dealer to buy crypto. But I think today, the first crypto ETF is coming to market. So that may be an option going forward. Mm-hmm. But we'd like to learn more. We'd like our clients to learn more. So perhaps Kara can help us understand the crypto market a little bit better.
Sure, absolutely. So Kara, why don't we kind of start at the ground and go up from there? And just, if you can take a minute describing what is crypto, how long it's been around, the growth that we've seen around it, and then we can take the conversation from there.
Absolutely. And, it's interesting that you say that this is a really, popular question among your clients. What is crypto is actually one of the most searched Google phrases.
Wow.
So you guys are not alone. A lot of people are wondering, what is this that keeps popping up in the headlines? And interestingly, so some of the original blockchain technology that is used to support crypto dates back to the early 90s. So it was a way of sort of time stamping documents. I don't know if you guys remember the trading desk, when you would have an order come in, there was literally a machine that would stamp it, right?
So you could push it in the machine, right?
Yeah. You could prove what time that was brought to the trading desk. Well, this was an attempt to do that electronically and be able to identify, when a particular document was submitted or changed or whatnot. So that technology then kind of like built over time, and crypto as we know it today, or Bitcoin, I should say, really dates back to an academic paper in 2008. Now, this particular paper, you can still pull it down, might put you to sleep, but it is there and it's accessible. And it is signed by somebody named Satoshi Nakamoto. We have no idea who this individual is. There's some speculation it's a group. So there's this like real air of mystery around it, because the foundation that was laid in this paper, and obviously whoever invested in Bitcoin in 2008 would be worth a heck of a lot more money today. So there are a lot of people wondering who actually was pulling the strings originally. So that's always sort of a favorite topic to sort of think about who this originator might be. Now, it's also important to keep in mind, we talk about crypto. Bitcoin is the most well-known cryptocurrency that's out there, but there are 10,000 different cryptocurrencies. Like even the estimate of how many cryptos there are, you'll see estimates vary widely. But a couple of important things to keep in mind when it comes to crypto. Number one, I mentioned it's based on this blockchain technology, which is, it's meant to be, I won't quite say foolproof, but it's meant to be very difficult to be tampered with. So in that sense, secure. It's also decentralized. And so this is a key component of any cryptocurrency. So if you think about the US dollar, there is the US Federal Reserve that is in charge of managing how many dollars are out there in the economy. If they pump more dollars in, it helps the economy expand. If they withdraw dollars, it will help the economy contract. And that is a very deliberate thing that the US Federal Reserve will do. Cryptocurrency, there's nobody there at the tiller sort of managing how many are out there. The actual supply of Bitcoin or other cryptocurrencies is a mathematical formula. But it's also decentralized. So rather than being held in a central place, anybody in this kind of peer network can sort of tap into this blockchain that shows who owns what and be able to verify, yes, that's a legitimate coin, that's not. And so you have like this very diffuse network that is supporting the currency. It also makes it kind of complicated. And it also is the source of some of its drawbacks as well. And I will say, you know, what we're seeing is that the technology that underlies this idea of a peer-to-peer network, we're seeing have implications outside of cryptos as well.
So what would you say are the leading indicators or the driving factors for crypto?
So one of the things, you know, if you think about why are people buying crypto, there are a couple of ways to answer that question. One is there are certain people who are buying crypto because it has momentum and it's going up and I want to be part of it. And that we see in all types of asset classes, right? That's not unique to crypto. We see that in plenty of stocks and bonds as well. Another is that you want to be able to take part in this decentralized currency. You don't like the idea of storing value in a currency that's managed by a government entity that maybe you don't trust so much. So that's a sort of use case for it, where you want to be able to store what you own in a place that you think is safer than maybe a bank. A third one might be that you actually see opportunity and that the demand for crypto is going to grow, and that demand will grow faster than the mathematical formula that determines the supply. So that would be more of a value-based bet, and you're looking to be able to grow along with that currency. A fourth one, and a theme that you'll see, is this idea that crypto can be a hedge on inflation, and it sort of is related to other reasons. So a lot of times during periods where people are concerned about inflation, again, they want to store the value that they own in something that's more protected. So a lot of times during periods of inflationary pressures, you'll see people move into gold, because gold is seen as an asset class that does well and takes and increases in value as inflation ticks up. So people are starting to use crypto as an inflation hedge as well. Now, you mentioned leading indicators. This is really challenging because we can talk about the different reasons why people have bought crypto over the last couple of years. But when we think about leading indicators in traditional asset classes like stocks and bonds, we have decades and sometimes hundreds of years to be able to say, okay, when this happens, then stocks will move this way. We just don't have the history in that sense with cryptos to be able to understand what some of the drivers of this will be over the long term. And that makes it a big challenge.
And
I think the thing that you said, which I think makes the most sense to me and what I see in our clients, is this idea of momentum. That what's driving this, there's really no underlying value. It's not like a bond that has a dividend. It's not like a stock that has earnings, but there's a lot of excitement about it. So people are excited and they don't really want to miss out on, well, if it goes, to 100,000, I don't want to miss that opportunity. But there's really no intrinsic value to it unless you value the idea of being anonymous, which is another whole, factor. But, most of our clients are not concerned about anonymous, purchases.
Right.
But so to me, that it sounds like momentum is the biggest factor, and that's great as long as momentum is going forward, and then it's very volatile.
Right.
And, is extraordinarily volatile. And so this is where, as a practitioner in investments, it becomes very difficult. I mentioned earlier, no leading indicators to be able to really identify what the drivers are. We do know what the volatility has been over the last couple of years, and it's multiples of what you find in more traditional asset classes. And so typically when we're constructing a portfolio, we're going to be very, very careful in thinking about what's the potential risk associated with this asset class and what's my return. And I want to make sure that my return is well above whatever risk I'm taking, and that my time horizon is long enough, right, where I can see through that volatility. Well, if you're doing that in cryptos, the risk is so high that your return has to be enormous in order to be able to offset that risk. Now, that's not to say that cryptos are not going to go up. It's just, again, as a practitioner and being being somebody who's like very risk aware, it's really hard for me to come up with a scenario in which I'm confident that whatever the return is on that crypto asset is going to overcome that volatility that we see day to day.
Well, that's another good word. So, confidence. So I have confidence that if you buy, a basket of 100 companies and those 100 companies make money, over time, their stocks will go up.
Yeah, yeah.
I have confidence that if you buy a high quality bond, that you're going to collect your dividend. But I don't have any confidence or any way to know how to build confidence that crypto is going to increase enough in value to offset the amount of risk that you're taking. So that's a big part of the problem.
Yeah, absolutely. And again, like part of it goes back to that history. I mean, I have reams of data and I have statistical models and I have all different approaches that I can analyze and sort of think about how different asset classes work together, how they work in inflationary environments, deflationary environments, so that when the market sells off, I can with a lot of confidence say, if you have a long enough time horizon, like you're going to be just fine. But crypto, it's harder to make that argument.
Sure. So one of the concepts I use is I say to people, well, let's talk about your serious money and let's talk about your play money.
Yeah.
So in the serious column, we're going to approach it with, a diversified portfolio. We're going to have stocks and bonds, maybe some commodities, maybe some gold. But then people always want to buy a certain stock. They want to buy Facebook or they want to buy, Google. I think that's different, but they want to buy something that has a higher risk factor. So I'm okay saying, well, for the serious money, whatever percentage of your portfolio that is, whether it's 80, 90, 95%, we're going to invest like this. And then if you want to have a little fun over here, well, you can take, a couple percents and invest in crypto. And hopefully there's going to be an ETF of crypto soon. I think it's coming out today as we speak.
Yeah, yeah.
And, that's a little bit different. So to me, in my mind, I can't quite get the confidence to conclude it as part of my serious portfolio, but as some play money, I can see it.
Yeah, and I often recommend that because there are some people who just love being in the markets, right? And they get really excited about it. I always talk about my brother who, not a finance person, but loves technology, right? So he's somebody who wants to be able to participate in Apple's growth and whatnot. And so for those types of folks who want to be able to make individual investments and experience that, good rule of thumb is like 10% of your assets. Again, everybody's different. You have to make sure it fits within your risk profile. But if you think about 10% of your assets in that play money, then even within that, Bitcoin should be no more than, let's say, 10%. So you're talking about maybe 1% of your total portfolio if you have the risk profile to be able to do it. And you have to make sure that you don't need that money, that really is speculative money that you're not counting on in the near term.
And more importantly, even if it goes to zero, it's not going to change your lifestyle.
Exactly.
I heard a commercial the other day and it was on the radio. So it was portraying a boss of some sort, with all of his employees in the conference room saying, we had a great year this year and everybody's getting their bonuses paid in Bitcoin or cryptocurrency, whatever he said, right? And so you could hear them cheering in the background and everyone was so excited. And he said, and today you're rich. And then he said, and tomorrow you won't be. But then the next day you will be. And then the day after that you won't be.
What was this a commercial for?
I have no idea.
It doesn't matter.
Gonna fire that ad agency.
But I was in the car with my husband and I just cracked up laughing because it's true. You have to have the risk tolerance. We often talk with our clients about the emotions behind investing. And that's the number one thing that we talk to people about around, how comfortable are you going to be watching the ups and downs as part of the conversation. And so, having those extremes, today you're rich, tomorrow you're not. Today you're rich, it's not for the faint-hearted.
Yeah.
You should get a copy of that commercial and play it for everybody who wants to invest in crypto.
That's great.
I know it. We should have it as like, the tail end of this video.
Yeah.
Well, it reminds me of something my father used to say to me. He says, Kevin, remember this, do not mess up with other people's money.
Good
advice.
So, I feel whatever I might do for myself, I tend to be more conservative for my clients. And but I think the way you described it, at most take 10% of your money for play money, and then perhaps 10% of your play money goes into crypto. I wouldn't object to that if somebody said they wanted to do that. And my preference, of course, would be to have a diversified portfolio of crypto, not just, Bitcoin.
Right.
Yeah,
So
absolutely.
hopefully that'll come to pass, and then something we'll be able to offer people.
And I wanted to follow up on your comment about it actually being difficult in some ways to invest in crypto, right? Because it's not available at like a lot of the broker dealers. And that's an important thing to keep in mind too. And as part of the risk associated with crypto in general, there is no infrastructure built out around crypto today, or it's very, very limited. So you can't buy it in a lot of places that you would normally be able to buy a stock or a bond. You can't use it as a currency in a lot of places where you might go shopping. You can't store it in a traditional place where you would store assets. There are also very few regulations. So, Bitcoin miners, the wallets, there are no laws that are protecting those things. Now that's part of the allure for some folks. But a lot of us, think back to the financial crisis or early last year, a lot of us were really happy that we had FDIC insurance on our bank deposits, right?
Right.
You guys know, like all fees have to be disclosed, all conflicts have to be disclosed. You don't have any of that in the Bitcoin world. And, there might be people who are happy to sort of escape the Federal Reserve, but that also means that you don't have a lot of the protections that you do as a traditional investor.
Yeah, I would say generally we don't attract that kind of person. Most of the people that we attract, want to live in that kind of regulated world that has a certain amount of safety and a certain amount of protections. So that doesn't seem to come up as much. But I think people do see this as something that's happening and they want to participate in it. And in some ways, I think of it in the same way you might think about gold. It doesn't really have a lot of intrinsic value. I mean, they do use gold to make things, whereas they don't use crypto to make anything. But some of the things you said, you can't, what are you going to do with your gold? You can't store gold? Well, I guess theoretically you could, but it's not so easy.
Right.
And this is even more complicated and more difficult to manage than that. But an ETF might change the picture. And then there's a trading platform where you could benefit from the trading within crypto. So I think it's changing, and it might be possible to include, maybe this year at the latest next, including crypto in some form in our portfolio. So, we've got an eye out, and our plan is to make it available to those people who want it.
So we've talked about the past, the history that we know of. We're talking about the current value and definitions and risks and opportunity presented to us within crypto. And we have somewhat of a runway of what we think the future may hold. Kara, do you have any final thoughts on what we may be able to expect in the future as it relates to crypto?
Well, one thing I think for sure, we're going to see more regulation in this space, right? The government can no longer ignore all of the interest and the growth that we've seen in cryptocurrencies. So definitely expect more transparent reporting, more oversight of fees and settlement associated with it. Tax laws, right? Like crypto right now is not subject to a lot of tax laws that other assets are. So all of that is coming, and I think in the not too distant future. I would also say that, we talked a lot about like sentiment when it comes to investing, momentum in these spaces, volatility. I think it's easy to say that we're going to continue to see an awful lot of volatility in these asset classes because they're very nascent, because there's not a lot known about them, because there's a lot of sentiment wrapped up around it. So it's not difficult to say, to sort of forecast that volatility is not going away anytime soon. And then the third thing I would say is the underpinning of the technology of these currencies continues to have more and more implications. So I think being able to watch the blockchain technology and the innovation that you can see around it is going to be really, really interesting.
Great. Thank you, Kara. We really appreciate you joining us today. Kevin, do you have any final thoughts?
Well, the last word you said was also, I think, a great word, and that is innovation. We know for sure we're going to see all kinds of innovation in, the word is fintech, whether it's payment systems or trading systems. I mean, that trend is well established and is not going to change. And certainly we want to keep an eye on all those changes. And, where they present value to clients, we want to participate. And where they, just raise risk, maybe we don't want to participate so quickly. And I just want to paraphrase one of my heroes when people ask me, well, so Kevin, what do you think is going to happen? So I'm reminded of J.P. Morgan. So the newspaper reporter comes to him and says, Mr. Morgan, what do you think is going to happen with the stock market? He says, well, son, prediction is very difficult. especially about the future.
I love it.
I'm going to get that tattooed on my arm.
You should.
That's a great idea.
Well, thank you, Kevin. Thank you, Kara. And to everyone watching, as always, for more information, visit our website, wealthpreservationsolutions.com. We hope to see you again soon. Until then, stay happy, stay healthy, and stay wealthy. Bye.
Bye.
Thanks, guys. Take care.